I think that January of 2024 was the beginning of the period of corporate adoption of Bitcoin. And, that first big catalyst was the SEC's approval of spot ETFs for Bitcoin. The second big catalyst is going to be the SEC's denial of every other crypto application for a spot ETF. And the entire world was thinking, will the regulators ban Bitcoin? And we answered the question, no, it won't be banned. And then the next objection is, but will it be copied? And when we actually see the regulators deny the applications of the copies of other crypto assets, then we will have checked the box. It won't be banned. It won't be copied. And generally, when people are, if you're deciding whether to build a 100-story skyscraper and invest hundreds of millions of dollars on it, and someone says, well, you either need to use steel or you need to use bronze. And you say, well, which one is the right one? And the answer is unclear. Well, it might be that the bronze is the right one and steel collapses, or it might be steel is the right one and bronze collapses. That paralyzes a big corporate project. But when you get past that and you realize, well, there's just steel and there is no second best metal for structural civil engineering. Once you get to that point, the project moves forward because it's pretty obvious to the corporation they want the 100-story building. They just don't want to be paralyzed by the indecision and the fear of making the wrong choice. So I think that the critical catalyst will be not just the institutional or the regulatory acceptance of Bitcoin as an institutional asset, but it'll also be the regulatory rejection of the alternatives. Well, you've got individuals and they have to talk with one or two people that are in their close circle and go through a lot of research to make a decision. And then you have private companies, and they sometimes have one investor and one or two executives, and then they make a decision. Or maybe they might have one or two attorneys or finance people. But when you get into public companies, for them to make a decision like this, they have to take into account the questions that will come from the finance department, from the legal department, from the technology department, from the senior executive. And then they'll have questions from the board of directors. And then they'll have questions from their outside auditor, from their outside legal counsel. And after they've aligned the interest of all of those, and those people will be thinking, well, what about our regulator? And if they're in the UK, it's a different regulator than France, and that's different than Japan, that's different than the US. So the nexus of the company makes a difference. And let's say they get through all of that and they build consensus amongst the officers and the directors and the key professional partners of the firm. Then they've got a shareholder relations challenge, which is they might have public equity holders. They might have public debt holders. And so if you have creditors, the bank might own some of your debt, the bond holders might own some debt, the equity holders might own the equity. And the issue is, how do I communicate and build consensus with them? So corporations, they tend to have many, many more challenges. They've got many more constituencies to align, and they don't just consider the consequences of making the decision, but they consider the ripple effects 2 or 3 or 4 levels deep. Like, for example, if we do this, what will our biggest shareholders, limited partners think of their decision to invest in us? So it might be 2 or 3 steps removed from us. And they also consider not just the rippling of this organization is backed by that organization, is backed by the state of California, right? They also consider, well, what about 10 years down the line if we have to enter into a new business and, will this affect that? And so corporations, by their nature, they move slower. They need more consensus. And you could get a little bit dejected But there's that Japanese phrase, maybe it's a Chinese phrase, is if you want to go fast, go alone, but if you want to go far, go together. And once the company is aligned, they can invest hundreds of millions or billions or bring $10 billion of capital to bear. And they can bring that benefit to millions or tens of millions or hundreds of millions of people. So it's not really an either or. It's just a bigger investment in order to get a better result. I think you look back at the last 15 years and you can say, well, from 2009 to 2020, that was the crypto cowboy years, those offshore, wild, crazy times. And it was primarily pre-institutions, pre-corporations. I think from 2020 to 2024, those are the crazy years that, with COVID and lockdowns and zero interest rates. And that's when you started to seeing Fidelity became much more visible with Fidelity Digital Assets, and Coinbase came public, and all the Bitcoin miners came public, and MicroStrategy adopted a Bitcoin strategy, and Square became Block, and Cash App grew by leaps and bounds, and Tesla bought Bitcoin. So that was that crazy middle period where the entire industry wasn't sure where it was going to go. 2024 kicked off the era of corporate adoption and institutional adoption of Bitcoin, where now that tension between our corporation, is this for corporations, is this for institutional investors, or is this just a retail offshore phenomenon? That got resolved in January, and by the end of 2024, it'll be pretty clear. The next 4 years, this is the early period of corporate adoption, institutional adoption. This is the period where BlackRock can go from nothing to having 100 billion or hundreds of billions of dollars of Bitcoin, right? So there's a struggle of who will securitize the ETF. And then this is the period when we'll see, some major banks, banks in South America, a bank at Taul, or banks in Europe or banks in the US that will become Bitcoin custodians. Which one and who will be the leader in that space? Well, we'll know by 2028. We're still waiting to see. And this is the year when you'll start to see large corporations adopting Bitcoin as a treasury asset. We'll have fair value accounting, and it'll become much more normal. And you'll start to see a universe of 20, 30, 40, 50, 100 companies that have some Bitcoin exposure. And I think once you get to 2028, from 2028 on to maybe 2040, that last 12 years, that'll be just breakneck growth. I mean, we'll see everything kind of working. We'll see 90%, 95% clarity as to how it's going to work. That'll be the growth years. And I think when you get to 2040, Bitcoin will be 30 years old. And we'll have moved. The first 15 years were kind of adolescent childhood. The 15 years after that, the teenage, young adult years. And then it'll be like the first 30 years of the internet, right? And from there, it'll be a growth industry, but it'll be kind of a mature, well-understood growth industry. And every corporation will expect to work with it. Everybody will understand it. It won't be this crazy, exotic, complicated thing anymore.
Thank you for joining us today on this insightful journey into the world of crypto and investing. If you found value in today's discussion and want to stay updated on future crypto news and market insights, don't forget to hit subscribe button below and click the notification bell. By subscribing, you'll be part of our growing community, gaining exclusive access to timely analyses and strategies. I look forward to having you with us in the next video.